You are so lucky to be a passive income investor in Canada because now there are so many ways to invest your money and generate passive income. You can use ETFs or you can use stocks. In today's video, I'm going to reveal one of the best income ETF just came out to the market, and this will be from Hamilton. So the first thing I'm going to show you here is from Yahoo Finance chart. Here you can see Hamilton Canadian Equity Yield Maximizer ETF. The ticker symbol is CMAX. .to. Of course, it trade on Toronto Stock Exchange. And the price, it's fairly cheap. It's only 16.44. And if we look at the volume, because you want to see volume to see if you can buy and sell if you want to, 11,192. Average volume is around 7,500. It's very low volume, but remember, this is Canadian market and it's very niche ETF. So it doesn't have a huge volume given that it's a brand new ETF, but this volume will increase. That means you'll be able to buy and sell fairly quickly. Now let's move to official Hamilton website. Hamilton Canadian Equity Yield Maximizer ETF. Ticker symbol is CMAX. And last distribution, they paid around 15 cents. And I'm going to show you how much yield that is going to be. Highlight of this ETF: diversified exposure to Canadian equities across multiple sectors. Active cover call strategy managed by option team with 50 plus years of combined experience, led by Nick. Available with modest 25% leverage to enhance yield and growth potential. So they are going to use 25% leverage to enhance the income, which is a pretty good. They're not going to use like a 75 or 50%. Using 25%, this is a strategy that Hamilton uses for a lot of their enhanced ETF. And that's why they call them enhanced, because they enhance the income with that 25% leverage. It's a pretty good, because if you want to increase more income, they can put 50%. That's more risk. By just putting 25%, it's just a way to increase the income you're going to get without having to have too much risk. So if you want to invest in this ETF and you're wondering if this ETF is fit for you, these are three main things you need to consider. Higher tax efficient monthly income from Canadian equities. So especially if you're investing in a taxable account. Broad sector exposure similar to the S&P TSX 60 through a portfolio of sector cover call ETFs. I'm going to show you these ETFs that they're investing in a bit. Reduce volatility from options strategy. So these are the main things, or main three things, that will determine whether this ETF is going to be fit for you. Investment overview: the fund seeks to provide attractive monthly income from a diversified multi-sector portfolio of primarily cover call ETFs, predominantly focused on Canada. And that's why this is called a Canadian Maximizer ETF, because it's focusing on Canada. And I'm going to show you why that is, because most of the ETFs that has exposure to this ETF, they're focused on Canada. CMAX does not use leverage. But then you might ask, you just said here that available with modest 25% leverage to enhance the yield and growth potential. But here they say CMAX does not use leverage. So the reason why CMAX does not use leverage is that CMAX is a fund of funds. So CMAX itself does not use leverage. But if you come here, you would see a HDIV, which is one of the ETFs that CMAX has exposure to. It does use leverage. So some of the underlying ETFs that CMAX has exposure to do have leverage, and therefore CMAX has some leverage, but by itself does not use leverage because it's a fund of funds. That makes sense, right? And one thing also you're going to see, this one doesn't have fees, but it does have fees because, again, the fees are under. 4 features of Hamilton Canadian Equity Yield Maximizer ETF. Income first: maximize premium income with at-the-money call options. Sustainability based on a 10-year backtesting of historical volatility. Flexible coverage: actively managed coverage ratio to balance income and growth. Distributions: higher tax efficiency with monthly income with modest variability. So it's not going to have the same income, is going to be different every month. It might be like 15 cents, 16 cents, 17 cents. That's just usual for most of these income ETFs. Overview of sector allocation for this ETF. Financial is 35.2, utility 21.9, technology 15.5, gold producer 14.2, energy 11.8, REIT is only 1%. So the big chunk of this ETF is in financials. And you know the reason why? Because financials, banks, they usually pay good distributions and they're stable. And the banks, especially Canadian banks, have been doing well in terms of performance. If we come down here, we can see, as I've mentioned, this ETF, CMAX is a fund of fund. The ETFs that compose this ETF, they have Max Hamilton Canadian Financial Yield Maximizer, which is 35%. UMAX Hamilton Utility Yield Maximizer 21.9, QMAX Hamilton Technology Yield Maximizer ETF 15.5, Amax Max Hamilton Go Producer Yield Maximizer 14.2, EMAX Hamilton Energy Yield Maximizer 11.8, and the last they have REMAX Hamilton REIT Yield Maximizer ETF at 1%. And they have a little bit of cash, but cash allocation is very little. And this is just the money that come in and also rebalancing, right? More details for CMAX. It does trade on Toronto Stock Exchange, and inception was May 8th, 2026. So it has been out for about a month and 2 weeks. Asset right now has accumulated 5.5 million Canadian, which is a pretty good for a brand new fund. And they do pay monthly distributions. The first time they paid about 15 cents. I'm going to show you in a bit how much yield that is. Currency hedging is none because CMAX itself is a Canadian fund, trader with Canadian currency. Management fee is zero. And the reason why this is zero is because it's fund of funds. So you're not going to pay a fee on this fund itself, but you are going to be paying fee on these ETFs. So you kind of don't pay fee, but you do pay. So you don't pay directly, you pay indirectly, which you're going to be charged with these ETFs here. But CMAX itself, it's zero. So this is something you have to pay attention to. They always say this is zero, but actually it's not zero. But all in all, is not that much. Risk rating for CMAX is medium. And where can you trade this ETF and which account can you invest in? All Hamilton ETF are available for purchase on the Toronto Stock Exchange, TSX, or CBOE Canada, and can be used in RRSP, REEF, FHSA, RESP. To set up a DRIP, please contact your individual brokerage. If you want to have all your dividend being reinvested, you just have to go to your brokerage. There's a place where you can click and say reinvest all your distributions. And for people who don't have accounts and you want to invest, one of the best brokerage I really like is Simple. So I'm going to leave a link below. If you want to sign up using that link, that will be great. I'm going to get some $25 commission, and you also going to get $25. So make sure you subscribe to this channel, and also don't forget to check that link, subscribe to Simple, because you're going to have all your distribution just reinvested easily. Now we know this ETF pays monthly, but how much yield that is going to be from the first distributions? Because we know the first distribution they paid, that was June 5th, they pay 15 cents. So how much that yield is going to be? I did on a spreadsheet here. Using the price of today, 16.44, paid 11%. But again, this will all depend on how much the price is going to be and how much they're going to pay. That will determine your annual yield. So having 11% paid with a stable ETF like this, it's a pretty good, because you're going to have very stable, no NAV erosion ETF at all. So guys, if you like this type of content, please don't forget to smash the like button. And if you have any comment or suggestion, make sure you leave in a comment below. Thank you very much for watching. I'll catch you next video. Bye bye.